Hey everybody, welcome back. We have a lot to go over and a short time to do it. We're going to jump right into it. S&P, that 4,400 being an issue. We talked about this. What I do like is this particular pattern that we're seeing right here. I love these 3-bar patterns. I love that pattern right there where you have a little bar, it pops up, you get a little inside doji right there, and then on top of that, you get a little pop over. These patterns are extremely important, and I'll show you the most important part of it. Now, whenever you have a bar that's breaking out, and then you have another bar here that goes sideways, a couple of things that are really interesting about this to pay attention to. One, as we note, or as I like to state, wicks are price rejection. We know that wicks are price rejection, or it would have filled in. Well, this filled in, this body filled in right in here. You zoom in that just a little bit more. You can see where we're going here. And people ask, do you get this granular? I do. So you can see how we filled in here. You can see how this bar filled in the rest of that wick today. But most important is this bar right here, that doji. Dojis are what? Signs of uncertainty. You measure 50% of the bar that broke out, the follow-through bar. These bars are getting bigger, and then this one's getting smaller. This is usually where you start topping. The size of the bar starts getting smaller. The thrust starts declining. You get concerned. Doji stop. They give you a, quote, sign of uncertainty, and then you've made a decision here. Now, whether this continues or doesn't continue remains to be seen. But that's something that I can work with. 4350 right there, rejecting that 4400 level. What we want to do is just understand that that's a control bar. You can see that that started the downward movement, and that puts you right at that 4405. The other thing about that bar is if we just grab it, come straight across, and just mark off that 4,400 level, you can just see the battle that's been going on there. And now the question becomes, are we setting up to roll over? I don't think we are for a myriad of reasons. I'm not going to get into all of it now, but you would have to watch Saturday's video. But here's left shoulder, and then you have the head right here, and then you have this right shoulder, and we kept hearing about, remember the head and shoulder gang we kept hearing about, and this is definitely going to crack, this is the end of the world. Goes to the neckline, breaks, take out the lower low, and then boom, we left. Now you are seeing signs of, maybe a little bit of froth with some of the smaller names that are moving, but you're not seeing any give yet. And I don't foresee any give. And we'll get into why we're not seeing any give in a moment here. But if we just look at that technically, you need to get through 4,400, or best case scenario, you stay here for a while. Now, if we talk about staying here for a while, that's exactly what we've been doing if you look at this. It's really hard to say that we're not building some kind of base. Since Friday coming straight across, you've been in a trading range. You haven't gone anywhere. And that's not the worst thing in the world. You are overbought. You have this as a resistance, which is a neckline, and you still are not giving anything back. Take a look at the RSI. You have the RSI here. You can see we're overbought. We go back to a neutral stance from the hourly. Take a look at the biggest drop that we had. We had 60 basis points to work that whole thing off. Now that's always important because you never know how that's going to work. You never know, is it going to be a massive drop or a little drop? And we can see right there that it's going to be a little drop, and that's what you want to see. And so basically, what did you do here? Well, you just stayed up here and you ate up supply. All right, so we have a kind of a game plan. We should not be remiss, even though we've gone over this before. The 4-hour is still through the roof. And you would want to see the 4-hour give some back, but we're not giving anything back. And usually higher for longer usually does not mean that we're going to have pain. It usually means by the time that we revert to neutral, we're actually higher. That's usually what it means. If you go through this on a 4-hour chart, and let's just look at this and say, okay, what was the longest period of time that we were up here over a 4-hour chart on the RSI? And then you would go, okay, well, for this amount of time, it really hasn't happened, except maybe we could say it happened here, where you broke out and then you started to sell off. And if you look at that period of time, that's about a month. So you can stay up here for a period of time. It's really closer to about 2 weeks, 2.5 weeks, the more I look at it. But you need to look at that and say, I can stay up here for a while. Now, I'm not even talking about these where you drop down and then you undercut and then came back. I'm not even talking about those. I'm just saying, how long can you stay up here? Well, this is very similar. You came over, rallied, came back. All right, so that's the only thing that was glaring like this. And then you come here and go, okay, well, where does that put us? And then, let me just mark it off so you can see it. And you look at this other time period right in here and go, well, this is where it marks us from there. Even if you come up here and say, all right, it's there. And then you start saying, okay, well, this is where we rolled. Well, that's when you broke. And then this is the low of that bar. And then you go, okay, well, look where the low took you. So it's not like you really moved or gave a ton back afterwards. I'm wondering if that's what's going to happen here. Like, I'm going to keep waiting for this to break, in other words, and it's going to break, but we're not going to go anywhere. The reason I think that might be the case, because you have to understand what it does is just talks about the magnitude of the move. That's all RSI does. So when you get overbought or oversold, or you see the divergences, that's really where the money's made. You can see that divergence right here. We talked about it for weeks. You can see it right here. And then from there, we just lifted. You have another one right here, and you can see how that just lifted as well. But when we drill into these and we look at them, we have to be cognizant of this. We have to be aware of it. And what this is doing, it's keeping me like a cat in a hot tin roof, where every time I turn around, you're very untrusting of this rally, of the ability for this market to hold. And all this market is doing is holding and dipping and then finding buyers again. That's what it's doing, despite what we may want it to do. That's what it's doing. If we take a look at the 4 hour here, this was absolutely glaring today. Yep, we're staying over. Look at the RSI actually going higher. Again, if you look at this over the course of the year, how many opportunities did you have like this that you saw? You didn't. So are we going to stay up, and is it going to be like this till the end of the year? You only have 7-8 weeks left of trading. So are we going to just ride this wave across? Is it going to be something like this where we break down very sharply, followed by huge rallies? It's starting to lean that way. It's starting to look that way. You have no economic data that's going to really change the Fed right now. You're going to need some kind of geopolitical event. That's the first thing. Second thing is, you don't have any earnings left that can move the entire Nasdaq except NVIDIA. That's all you have left. Other than that, there's no earnings left that can move it. So that leaves us with the macro side or the geopolitical side. And none of us are really have any idea what's going to happen with the war. But you're starting to flip the DTL, the downward trend line. This is a 4 hour. You have to pay attention to that. You look right here. So you're looking at 15.5. I mean, it seems to me you have a straight shot to it. So this is the area that I would be paying attention to. You're going to constantly see dips. You're going to constantly see opportunity to buy. And we're going to constantly be like a cat in a hot tin roof, in my opinion, because you're going to be looking at these and going, well, this can't possibly last. We're due for a pullback. We're completely overbought. And we'll go through some other criteria that clearly show that you're overbought. But market does not care. And ever since that Wednesday Fed meeting, we've done nothing but go higher. We have not had a red day. And there has to be one out there, obviously. But if you look at this chart and go, when was the last time that you had all these green days skewed together, and what we're waiting for is the reversal? By the time you wait for the reversal, or by the time you wait for that, it's too late. So you just have to play the hand that you're dealt, move your stops up, get out what you can. Some people just say, oh, I'll just hold it into it. I'm not sure that's the best move either, because you're going to have rotation. And here's a great example of that. The names that started to look like they were going to move are the Russell 2000 names. And rarely do we look at this, but this gave a pretty clear indication today of something that we should pay attention to. First and foremost, you have a positive divergence right here on the RSI on the daily. And you can see that right there. Let me get rid of this and we'll drop it this way. You see that right there. And you can see it here as well. Now, there and here. Great. Now we've got this doji sitting there. Well, small caps should move the most on the bond market. The bond market's rallying and small caps digested it, meaning yields dropping. And if yields dropping, what's happening, right? Bond prices are going higher. We're trying not to break the 55. People will say, don't chart yield. I'll chart anything. If it moves, I'll chart it. And if you have the VIX right here, you can see that you can't even hold 15. All right. So we know that we have this. We know that the NQ and Nasdaq was up about 1% today. ES was up about 30 basis points and back above what? That 55 for the first time in months, right? So we know where we're at. We can see how we're setting up here, how our moving averages are starting to come up. But you're starting to see something here on the RSY besides this positive divergence. You have this doji that's just sitting there today. And then we started to notice this at the end of the day. Now, this is very slight, but it's there. And what you're going to see up here in blue is the Russell, and this is the Nasdaq. And it's very slight, but it's there. If you take a look here, at the end of the day, we made a lower low on the Nasdaq. We did not make a lower low on the Russell. So that lets me know that, one, we're seeing rotation, and that's something I'd pay attention to. And people say, oh, well, it's really slight. It is slight, but that's how it starts. This happened right around when? 2:30, right? So we know that that's when institutions start getting involved. We know that they took out the lower low on the Nasdaq, and we know that they didn't on the Russell. Is that because the bond market's starting to rally again? So we have to start connecting the dots here a little bit, guys, and looking at things that way, because you want to be around. See, here's what you have to understand about an actual market that doesn't have $1.7 trillion behind you. You're going to rotate, just like you did today. Okay? You notice that today, if you were playing semis, you got a little frustrated. They would break out and then pull back a little bit, but they really weren't moving the same way that some of the software names were moving. You're going to rotate, and that's exactly what's happening here. And we saw that with the stocks today. People playing NVIDIA, the 460 was just absolutely glaring that that's where you were going to get to, and you did. And it still looks great. AMD, this looks like an absolute monster the way that this chart is setting up. It just looks perfect. So we are seeing that, but at the same time, you start looking at, okay, well, Microsoft's at all-time highs. That's a little bit different than how NVIDIA and AMD are trading. Microsoft is at all-time highs right now. And if someone was going to tell you that that's what's going to happen, you wouldn't have believed. But this is where we're at. So we've got nothing but blue skies above us here. So we're going to have to pay attention to that, and we're going to have to see how that goes. I think that's a very important distinction for us to note the difference here. And of course, you had some really good earnings. You had D-Dog. Nobody thought that this was going to be that great. But what we are seeing is good earnings are being rewarded, and these names are having follow through. It says clean that off right there. This is something we actually bought in the community. If you're in the wait list or on the wait list, look out for a invitation. Invitations are going to go out this week, and then they'll be done for the rest of the year. Enrollment will be closed. So if you're interested, just get on the wait list. Now you see the link in description, and I'll pin it to the comments as well. So you see where you're at right here and how you're flipping those levels? I mean, you're right on the neckline, and it doesn't even care. It went right through it. This is exactly the kind of behavior you want to see. You look at Amazon. We haven't had a pullback. I mean, you have not really had a pullback. I thought it was an okay quarter, but I didn't think it was like this. And you're setting up to break out of a major trend up here if we can get through. So I think we're starting to see some of that. But in the same breath, you're going to have some companies that are going to come out and miss. Like, for example, UPST came out with earnings tonight, and they were an absolute dumpster fire. Okay, and you can see it taking its dumpster fire status by dropping 18% after hours, and this is just going to be a disaster. Rivian, their deliveries were actually up, and the stock's hanging in there. This may hold tomorrow, it might not, but you're going to see rotation in the names. That's becoming increasingly clear. It's really surprising that Tesla just rallied again, right? And look at where it is. We should talk about this right on that 200-day moving average. All right, so we understand that we're seeing some rotation. We're certainly seeing that the people that thought that the bond market was going to rally right back up on the yield side, rather, that's clearly not going to happen, right? You're already seeing signs that we tried that, that's an overbought, and now guess what you're getting? You're already getting the other side of it. You're getting more. And I think that's a really important bar here. I know people are going to say, well, it's just one bar. It is, but that's how things start. You come to these levels, and if you can start cracking that 450, people are going to start really getting involved in the equity side, and they're really going to start looking at the small caps in some of those names. I would suggest that that's something that we do as well. I thought it was interesting that discretionary, biotech, and technology were all the leading sectors today. In other words, we talked about this Saturday, we actually went over that. And I do appreciate you guys sharing these videos and the comments. It helps greatly with the algorithm and make sure that I don't have to run ads in the middle of these in order to get the algo to show the videos. But you see where we're at here? And I'd rather do it that way, you guys sharing and commenting versus me running ads in the middle of this. So you see where your cup is, the handle, and now you're breaking out of it. Very little to say here on XLK. It looks excellent. Microsoft's breaking out. Apple was nonstop today. I had traded Apple. I made a little on it. I didn't expect it to push that way clearly. And then you're looking at XLC. We know what names are in here with your Netflix, but Google, your Meta, but this is setting up again, isn't it? And I think that's really important. They're the sectors that were up today. What were the sectors that were down? Energy. I mean, why is energy blowing up with all these conflicts? Well, it's becoming increasingly clear that they're not going to raise rates, right? I think that's becoming more and more clear. No matter what one of the Fed speakers said today, it's just not going to happen. The economy's slowing. Matter of fact, even Yellen's comments where she's starting to become more worried about what they've done versus anything else. So, and I get that. I mean, it's definitely something I'd be concerned about too, where you don't really know all these Fed hikes that you did. You have no idea. You've given them no time whatsoever to settle in. So you really don't know how much damage you've done to the economy yet. So it is good that they're pausing. They should have probably done it a while ago, as they should have raised a while ago, but probably the worst Fed in history. Anyway, you see where you're getting boxed in here and this is getting ready to roll? That's getting clearer and clearer that you're setting up, right? So you're going to want to keep your eye on this and on energy. They're not the names that I would be looking at right now. Even some of the, and I want to spend some time on this, and we were looking at these commodity-based names going into this kind of wartime event. And even like the gold that I bought, you start looking at the copper names, like these don't look great anymore, guys. They got to necklines and they're starting to look a little weak. So we're going to have to see how that plays out. Now, on the flip side of this, we are starting to work some of this stuff off, and I'll show you what I mean by that. So stocks above the 50-day. You start seeing S5FI, and you can start seeing how we're acting in here. And we're acting fairly well, right? We're actually back in the middle on the 50-day coming off that bounce. So we've worked off that oversold, and we're right there, right where we need to be. Let's clean off the 50-day moving average and just pop that back in, or 200-day moving average. But when we start going through these, you start seeing even over the 200, we're not back to 50 yet, but that's definitely something we want to pay attention to. We got right back into the 90s again, and now we are at 85 here on the 5-day. So everything that we're seeing is lining up and starting to adjust and look really good. Look at this chart. I mean, look at race. You're at all-time highs. How many companies that actually are, truthfully, consumer discretionaries are in this space? And I look at them as, when you're buying these cars, usually you're some kind of collector or you have a lot of disposable income if you're buying a car like this. It's a different kind of class. So when you start seeing this, it's a different kind of person that's buying this, right? Someone that's very wealthy. And so you start looking at that and going, well, that's pretty interesting that they're 2 years out and this is what they're dealing with. I did a workup on the newsletter. If you don't get the newsletter, link in description, it's free. But when I went through like their presentation, this just looked amazing. I have a really tough time buying the XLY going into the end of the year, but maybe it doesn't sell off the way that I think it's going to because of some of the economic data that's come out. But we have to start putting all these together and looking. I really would feel better about the market as a whole if we could get some stability out of the financial group. If XLF could get it together, I'd start feeling a little bit better about what we're seeing. But that's still dragging, and it's worth spending some time on this and going, well, here's the one DTL, and then we start drilling into the other one that's right here that we've already cracked, and you look at that going, all right, well, that doesn't make me feel really great either. Overlay just very simplistically the 200, and I'm fighting the 200. I don't want to fight that. You cannot have a sustainable rally in the S&P without financials, without energy. It's just not going to work that way. Tech is only going to carry you so far. You need, for anything sustainable, you have to get the financials on board, and I don't know that we're going to. So I'm more interested in the Nasdaq and the Russell than I am in the S&P. If I had to be in just the S&P, I'd be looking at Apple and Microsoft. That's it.